The United States is heading towards a sovereign debt crisis. Their national debt is closing in on $35 trillion, and the national debt to GDP ratio is the highest it's ever been at over 125%. The US government is now spending over $1 trillion every single year just on paying off the interest from their debt. An enormous figure that's larger than most economies in the entire world. This is, of course, an extremely dangerous situation and could very well lead to the end of the American and the dollar-dominated era. Today, I'm going to explain to you what a sovereign debt crisis actually is and why the US is currently on the brink of one. Now, it's no secret that the US is a debt-based society, and therefore its incredibly high and continuously rising national debt is often brushed aside and looked at as a problem that can be kicked forever down the road. But the problem is that it can't, and eventually the government will find itself at the end of the road with nowhere left to kick the ball forward to, and this is where the phrase sovereign debt crisis comes in. But what exactly is a sovereign debt crisis, and why is it that the US is on the brink of one? We'll first need to understand a vital difference in how the free market generates money and how the government generates money. In the free market, the only way for any person or company to receive purchasing power or earn money is to give something to someone that they want more than the money than that person is willing to give. Basically, value arbitrage. Now, this exchange always happens voluntarily, and both parties come off better off because both parties lose something that they want less and gain something that they want more. This is literally how wealth is created. This means that society makes money and creates wealth and gets richer by working with one another. But how the government makes money is entirely different, because the government, to receive purchasing power or to earn money, they don't have to give something to a person or a company that they want badly enough to give them what they want. Instead, the government just points a gun or threatens jail time or puts into law, give me this amount from your paycheck or buy this product, and if you don't, consider your life over. This year, the US government has used this to get $3.75 trillion from American citizens, which is 10% more than it was last year. And in fact, if we look at government taxation revenue throughout history, you'll see that it's been this exact trend of tax revenue increasing year after year after year for pretty much forever, and in particular since the end of the gold standard. Now, if the government gets a little bit too ostentatious and they try to take too high of a percentage of your income, say, in taxes, the actual tax revenue that they collect would be lower, as people would seek to find loopholes out of the system or even just evade it altogether. This is a very simple concept. It's called the LAA Curve, and it's well established throughout economics. And there's been several times throughout history with governments thinking that just raising tax rates means they get more revenue. A perfect example being France, looking to implement a 90% tax rate on the highest earners in France. No one's going to pay that. They'll just leave the country. And this is the fundamental problem. After a certain point, after taxing the population to oblivion, a government still needs more money, as its spending always increases every single year at a higher rate than they tax. But as we have concluded, they can't just tax more forever, as people go on to find loopholes or just stop paying their taxes altogether. So what do they do instead? Well, they start borrowing a hell of a lot of money, but the problem with borrowing is that when the tax revenue coming in becomes smaller than that amount borrowed, it leads to a large budget deficit, and over time, that deficit just gets worse and worse, and eventually it becomes so large that it can't be paid off. And another problem with borrowing is that if you keep borrowing, eventually there will not be any money left to borrow to keep that system running. Now, a true debt crisis in the US will undoubtedly ruin bond markets and torpedo just about every company in the S&P, which begs the need for diversification beyond just picking new stocks, but entirely new asset classes, and that's where we may be in luck. The 2022 report from Citibank details an asset class that actually has a negative correlation to developed market equities. And Forbes have discussed how this asset class has the potential to protect your portfolio from inflation at the exact same time. Now, Citi and Forbes are actually talking about blue chip contemporary art, which sounds like an obscure asset class, sure, but you'd be surprised. Bank of America recently surveyed investors 43 and younger with over $3 million in investable assets and found that 83% of them currently own or would like to own art. Now, I've talked about this asset class myself for years now, and I've invested in it as well, and it it's only been growing. In fact, the overall art and collectibles asset class is now estimated at nearly $2.2 trillion by Deloitte and is expected to hit almost $2.9 trillion in 2026, leaving lots of room for potential upside. That's why you should check out our longtime channel sponsor, Masterworks Art Investing platform. With 3 recent illustrative sales, Masterworks investors have realized net annualized returns of 17.6%, 17.8%, and 21.5%, just to name a few. And they've already distributed back a total of over $60 million in investor proceeds across their 23 exits. Now, I'm not an art expert, but that's kind of the point. You don't need to be an art expert to diversify with Masterworks. You also don't need to throw down millions of dollars and can diversify between multiple paintings, because Masterworks' art investing platform offers blue chip paintings to investors in the form of shares. Some of Masterworks' previous offerings include legendary artists like Picasso, Basquiat, and Banksy, and they're nearing over $1 billion of invested capital, so offerings have the potential to sell out rather quickly. So if you're interested in learning more and want priority access, you can use the QR code on screen right here now, or my link in the description. Past sales and previous offerings demand are not indicative of future results, of course. All investing involves risk, and you can see important Regulation A disclosures at masterworks.com/CD. Now, this dire debt situation in the US can actually be seen with the government today. They've been borrowing money for so long now that they have pretty much started running out of money to borrow. This can be seen with the rising yields on US treasuries. See, obviously, each time the US government wants to borrow money, they call for an auction and they give a yield to those lenders. The problem is that eventually there's not enough people willing to lend from that rate as they've borrowed all of their money already. And the less money people have, the more protective they are going to be with it. So the government now has to increase that yield to attract those people that now have less money than they had before, as they've already taken so much. But eventually, this spirals out of control, and you get to a place where there are just not enough dollars at all for them to borrow from. And I mentioned there have been several times this year alone that we have seen auctions where the US government has tried to borrow at a certain yield, but there have not been enough lenders. So they end up having to pay a much higher yield, which you can of course see the problem with, because that's the interest payments that is crippling the US government. Now, at this stage, the government can either spend less to try and rescue its economy from collapse, which it never does, and of course it's not going to do anytime soon, or it can continue spending that same amount and continue to go down this path of risk and default. Hand in hand with that goes obviously printing money. And when the Fed prints more money, as can be seen in 2008, in 2012 and 13, and especially in 2020 and 2021, when they've turned on those money printing machines and let them run, it always leads to massive inflation. And as more money chases the same goods, it drives the prices up to the roof. And this is exactly what we saw a few years ago in 2020 and 2021 especially, where the Fed started printing so much money and prices went through the roof. Inflation was reported as high as 10%, but we all know how stacked those statistics are by the government, and we all know it went a hell of a lot higher than that. Now, with the government now having played all of its cards, those being taxes, borrowing, and then calling on the central bank to just print more money, the government faces a sovereign debt crisis, and when a nation's debt to GDP ratio hits 120% or higher, it no longer can tax enough to pay off that debt meaningfully. And of course, the US is currently sitting at 125%. In those crises, most of the borrowing is actually just used to pay interest on existing debt. And if you remember what I said at the start, you'll know that the US has come to a point where interest payments on their debt are now over $1 trillion a year. So it does sound an awful lot familiar. Now, a government that finds itself in this position only has a couple of options. It has to cut spending to get its finances in control, but we know how the government of the United States acts, and there's no way in hell any president, no matter who is elected, is going to go that route. So what's the next thing the government can do to keep their head above the water? Well, they can just dig their head in the sand and keep kicking that ball down the road. In this case, the government's just going to keep on borrowing, and eventually it will default. On the surface, this really doesn't sound too harsh, but what we have to understand is that defaulting would make the US Treasury fall off a cliff. Yields would skyrocket, and the position the US government would find itself in when it inevitably needs to borrow more money in the future would be awful. And then the US dollar would, of course, lose its position as that financial bedrock of the world, as the US government backing it up would no longer be as trusted as it once was. And then, of course, there's the whole bunch of government expenses like employees, among other things, that would simply stop being paid out because they just can't afford it. Now, is there anything else the government can do in a sovereign debt crisis? Well, they can call on the central bank to print even more money. The problem with this is, as I already mentioned, it's inflation, which we all know. And when you get into that sort of situation, it turns into hyperinflation. Now, of course, the US Fed is determined to do two things at once: to maintain strong job markets, to keep unemployment low, and to ensure price stability. But these things do not go hand in hand when you get into a sovereign debt crisis, and one of them always has to be sacrificed at the expense of the other. Either the government would have to just accept that millions of people are going to lose their jobs, the vast majority of them at first being government employees because the government just can't pay them anymore, but then that would have a ripple effect and impact other industries, and just millions and millions of jobs would disappear, or they're going to just have to print huge amounts of money to pay these employees, which then just floods the market with money supply, and obviously inflation goes through the roof, and we find ourselves in a situation like Venezuela or Argentina a few years ago. Now, all of these options that the US government has here have their own risks, and they are basically either completely unrealistic, like the first one where they just cut their spending, or they hold the possibility of dreadful consequences for American society, but the rest of the world as well. There simply is not an easy way out, and the solution the US government and many other governments in a similar position have decided to take is sadly to just bury their heads in the sand, to pretend that there is no problem and nothing will ever happen. This obviously isn't a solution. It does nothing to help solve the crisis. It doesn't even help get us close to some kind of solution either. It actually makes the problem worse, simply kicking that can down the road, hoping that in some crazy world, in some ridiculous future, it will all suddenly turn around and somehow be okay, when we all know for a fact it will not.